This is Group 2 for investment banking, consisting of Jacob G., Logan Penrod, Alan Sanchez, and Colton Weiniger. I was responsible for looking up recent equity, convertible, and debt financings, along with developments in the merger markets. Beginning with recent equity financings, the most popular style of equity financing comes in the form of initial product offerings. This allows companies to raise capital quickly to quickly grow their company. The downside, of course, is that they do lose part of the ownership in the company to shareholders. But in the past year, many companies have been bypassing traditional IPOs and they have been listing directly to the market, avoiding expensive underwriting costs. Some examples of this in the previous year include Spotify and Slack, with Uber expected to follow suit later this year. Many companies will also use debt financing as a way to retain equity in the company, but still receive that capital to grow their company. It can also be used as a way to get out of bankruptcy and fulfill obligations, such as is used by Pacific Gas and Electric Company in the recently proposed deal for a $34 billion debt commitment. Finally, convertible financing, which is neither debt nor equity financing, but rather a mixture of the two, is gaining popularity among investors due to the little downside risk, while still maintaining the ability to participate in upside reward if the security converts to a stock later on. Tracking the annual returns of convertible bonds from the past 10 years show that convertible bonds have outperformed or matched the S&P 500 index fairly consistently. In merger markets, Vivint Smart Home Inc. and Mosaic Acquisition Corporation have agreed to a merger, which is one of the largest special acquisition company mergers in U.S. history. With the merger, Vivint will become a publicly traded company, taking place on January 21st, and the $488 million in capital going along with the merger will allow Vivint to delever itself and position it for growth going into the future. Tom Pedersen had this to say: the merger won't change much when it comes to company operations, considering the executive leadership and company headquarters locations will stay the same. But when you're a public company, you know you have lots of, let's call them partners or shareholders. You've got additional scrutiny from regulators and there's analysts. But that for me is a positive because it sharpens your decisions. It sharpens your execution.
In investment banking news, central banks are warming up to the idea of issuing digital currency. Researchers for the Bank of International Settlements surveyed 66 central banks and found that extensive research is being done on issuing digital currencies, with 40% of the respondents having moved from conceptual research to experiments or proofs of concept. And something interesting to note is that in order to issue a wholly digital currency, banks must have the authority to do so. And according to the survey, about a quarter of those banks either have or will soon have the authority to issue digital currency. However, it was mentioned that there needs to be a clear evidence of demand, and that is something that is unclear at this point. In other news, word has come out that global banks such as Morgan Stanley and UBS Group are cutting Asia investment banker bonuses, with senior level employees seeming to have taken the biggest hit. This has mainly happened as a result of the slowdown in deal making in Asia and stocks in the region being the lowest since 2013. In addition, China's economic growth is the lowest it's been in 3 decades, having struggled with the U.S. trade war and tightening bank liquidity. Morgan Stanley's bonus pool for Asia, not including Japan, fell by about 9% last year, while UBS Group's fell by 14%. Even Citigroup, which had an outstanding fourth quarter, reduced its pool by 6% to cut costs. And while no new products or services have been introduced by investment banks recently, there has been talk of investment banks trying to find ways to make sustainability investable. This idea started to gain a lot of traction in recent years with the talks of global warming, um, with big asset managers starting to pay more attention. A couple of examples of this include financing for farmers in Africa and clean energy projects in other developing markets, according to an interview in the Wall Street Journal.
As we looked at current economic conditions, the most recent data we had available from the Bureau of Economic Analysis was from the third quarter of 2019. Fourth quarter data is being released later this month on January 31st. With the most recent data that we had, we found that real GDP had increased at an annual rate of 2.1% in the third quarter of 2019. Personal income had also increased by 0.5%, with personal consumption expenditures also increasing by 0.4%. Stock markets have been on a steady increase and upward trend over the past 6 months. And as of right now, the current federal chairman is Jerome Powell, who was sworn in on February 5th of 2018. As far as new developments that affect the securities market, the Federal Reserve Bank of New York intervened on Thursday with 2 temporary additions of liquidity that amounted to a total of $74.2 billion cash, which was injected into the securities market. There has also been trade tensions rising between Europe and the US, with talks of tariffs on Europe. This will have an immediate impact on the European auto industry and should have an impact on auto securities across the securities market.
In global markets, the demand for copper is going up. The price has increased by 4% from last year. SBGL, a company from South Africa, is expanding into high-tech metals. They are looking into copper, lithium, graphite, cobalt, and nickel because they are used in electric car engines. Other metals that are going up in value are precious metals. Gold and platinum have been rising slowly, but rhodium and palladium have increased 65% and 24% respectively. Gold has actually reached a 7-year high, and this is because of Trump's threats to Iran and the low federal interest rates. In the currency market, we see that the US dollar versus the euro is generally more valuable than the US dollar, but in the last few months it has been getting a lot closer as the US dollar is gaining value and the euro is slipping a little bit. In the hedge fund industry, the top 5 performers of last year were TCI, who made $8.4 billion, which is a 41% return. Lone Pine, that made $7.3 billion. Renaissance Technology, that made $5.6 billion. Egerton, that made $5 billion, and Citadel, that made $4.9 billion. More information on the TCI fund. It's the Children's Investment Master Fund. You can see on the right there's some information about their historic returns, and they consistently outpace the S&P 500. The CEO's name is Chris Hahn, and the activism that he's pushing is to have companies reduce their greenhouse gases. One potential LBO that's going on right now is KKR is considering buying Play, which is Dave & Buster's. It's currently trading at $42, but recently KKR took out a 10.7% economic interest, and the possible LBO, according to analysts, will be somewhere around $50 per share, which is a 25 to 30% premium. Other hedge funds are Pershing Square Capital Market with CEO Bill Ackman. He's invested a lot of money in Berkshire Hathaway because he says the price is likely to increase substantially over the coming years based on depressed valuation, understated near-term earnings, and potential for significant future earnings growth per share. Elliott Management is owned by Paul Singer, who recently bought 11.3 million shares of Evergy. Because of poor performance in recent periods, they issued the ultimatum that the company needs to restructure or merge with a partner. And another hedge fund is Starboard Value with CEO Jeffrey Smith, who bought $200 million worth of Papa John's last year. And in the last year, it went up 59%. And there's a possible LBO there. Here we have a couple of sources if you want to look up anything that we talked about or get more information. Thank you for your time.